Hello everybody, my name is Ron. Today we're going to talk about technical indicators, what they are and why they're important to trading. We place technical indicators on our stock charts to give us an idea of what the price of the stock is going to do next. That way we can try to predict the future price movements and capitalize on those movements and hopefully make a profit when the stock makes the next move higher or lower. So this right here is a stock chart, and if you're new to trading, I'm just going to explain this really quick. These right here are called candlesticks. They represent the price of the stock. Okay, each one of these candlesticks represents what the price of the stock did for that time frame selected. So what I mean by that is that this right here is a daily chart. Each one of these candlesticks represent what the price of the stock did during that day. All right. Now, if I wanted to change this to 5 minutes, now each one of these candlesticks represent what the price of the stock did for that 5 minutes. There's multiple time frames and we can go on, but right now I have mine set on a daily chart. Now that we know these are candlesticks and they represent the stock's price, we'll talk about the two main types of indicators. All right, the first main type of indicator is called an overlay. What that means is that the indicator actually lays or sits right on top of this stock chart and on top of the price. An example of an overlay would be Bollinger bands. These are called Bollinger bands. You can see right here, this is the top band, this blue line right here, and this right here is the bottom band. So these together form what are called Bollinger bands. Bollinger bands can help give us an idea if a stock is overbought or oversold. What I mean by that is when a stock is overbought, would mean that this kept getting bought up and bought up and bought up for such a long period in time and didn't really get a chance to retrace and go lower, that it may need to just pull back a little bit in price and the price may go lower for a short amount of time, or it may reverse entirely like it did right here. And oversold is the exact opposite. It means that the stock has been sold for so long that it may need to move higher periodically or reverse entirely. Another example of an overlay would be a moving average. So this right here is called a moving average. So what a moving average does is it can give us an idea of if the stock is above or below the current average price for that time frame selected. So you can see right here in this area, the 50-day moving average, which is close to the average price over 50 days, is around $262.92. You can see that the price up here was at $400. So it was like $150 higher than the average price. Gives us a good indication that maybe the stock needs to pull back lower and get closer to that average price, or it may need to just stall out and move sideways for a while the average over 50 days catches up. It also can help us recognize the current trend of the stock. You can see right here, when the price is above the 50-day moving average and it's moving higher, we know that the stock is currently in an uptrend, trending above the average. All right, the second type of indicator is called an oscillator. Now, an oscillator doesn't sit right on top of the stock's price. It usually sits either to the bottom or the top or the sides. This right here is called volume. Volume is an oscillator. Volume is important because it tells us how many shares are bought and sold within that current time frame selected. So right here on this day, since we're on a daily chart, you can see that 188 million shares were traded on this day. Another example of an indicator is stochastics. Stochastics, like Bollinger bands, can give us an idea if the stock is overbought or oversold. Once you start getting over this green line, we can say that the stock is overbought now. Since it's overbought, we may not be wanting to buy a position long in order for the stock to go higher because we're expecting that it may need to reverse and pull back. And you can see right here, that's what it did. So right here, you can see the stock's moving higher, gets to these overbought levels, and then it starts to kind of move sideways and then actually starts to reverse back down to the lower band. So it can also tell us when a stock is oversold. You can see right here when the stock's price moved lower, stochastics became oversold underneath this red line and told us that this stock may need to move higher periodically or even reverse, and that's exactly what it did. After it stayed oversold for some time, it finally broke back over and you can see the stock reverse directions. Now, using multiple indicators together can help give us a better forecast or even a better prediction about what price is going to do to a certain extent. Now, we don't want to be using like 100 indicators on our charts. A lot of indicators can tell us the same thing, or we can come to the same conclusion without using a lot of them. If you were to use too many, like this here, you can see what it may look like, and some traders' charts actually look like this. This is no joke, and they probably even look a lot worse. It would be very, very hard to analyze all of these different things, especially if you're trading like a 1 minute chart, where each one of these candles is 1 minute and you're trying to analyze things very fast. There's no way you have time to even see what half these things are or analyze them all together. Some people think it's necessary, but it's definitely not. You can actually do yourself harm by doing this and cause yourself what is called paralysis by analysis. You're analyzing so many things at the same time, you get paralyzed and you're like a deer in headlights, and you are no longer able to even make trades because there's just too much going on. My advice is to pick a few that you are familiar with, or try to get familiar with a few that you think may work for you. Maybe try one out here, try one out there until you find something you like, research them. And then once you're familiar with those, keep a couple on your charts to help you in your analysis. But you don't need your charts to look like this, and you don't need them to be way out of control. If you're interested in learning about the indicators that I personally use on my charts, leave a comment, subscribe, and turn your notifications on, and I will make some videos on the indicators that I use and why I think they work the best for my trading. All right? Hope you have an awesome day, and I will see you in the next video.